What's up, Mortgage Coach and Trust Engine community? I have what I'm excited about is a real special interview. First time I've interviewed Andrew Wagner out of Baltimore, Maryland. He's 28 years old and he closed 20 loans last month, which to me is a big deal. I met Andrew last week. I facilitated a Mastermind event at Churchill Mortgage in Nashville, and Andrew was like 2 seats down for me. And then we had a real good chat afterwards. But Andrew, thanks for making time to come share what's working for you.
Definitely, Dave. Really appreciate you having me. I'm excited. It's great to spend time with you and listen to all the value you brought to our group. It was a phenomenal day.
How did you like that Mastermind event? And did you get any takeaways?
Yeah, I did. Well, for one, I thought the Mastermind event was very helpful in a lot of different ways. I think, hearing different LOs from around the country for me was interesting, just to get an understanding of how different people are being so successful in this market. And little takeaways for me were just, I think that educating our borrowers right now is definitely probably the most important piece of value that we can really offer to our clients and stand out from the crowd. I really also took away the idea of being helping our clients achieve wealth creation for generations through home ownership. That's something I haven't been really talking a lot about to my clients, just showing them the wealth opportunity. And so, I think that's a big value add for obviously our borrowers, but also something that us as an LO, can be talking more about. So, I took a lot away from it, and you definitely, I think, fired a lot of us up. So thank you.
Yeah, no, it was good to be there. It was a great room. So a couple more notes before we get into the interview. Andrew him and I were talking, in prep, and he came up that he bought his first home when he was 23, which I applaud that. I mean, that's an awesome success story. He's 28 now, and he owns 7 properties. So I think you come from a real place of leadership and inspiration to have that conversation. I'm going to introduce you to Kristen Messerly, because you really are a first home IQ success story. It sounds like you got started earlier than the average, and to think that you've already got 7 homes, I mean, just congratulations. And so just wanted to call that out for the audience. What I really want to center this interview around is, like, how did you close 20 loans? It's a pretty tough time in the marketplace. If you don't mind sharing, your primary lead sources, how you're getting people from pre-approved under contract. Tell us, what you do is tell us a little bit about your marketplace, just so everybody's kind of like understands the marketplace you're in, and then walk us through those 20 loans last month.
Sure. Yeah, so my market, I live in Baltimore City. My office is just outside of the city in the suburbs of Baltimore and Howard County, Ellicott City. So, my clients really range from the actual city itself in Baltimore down south to kind of like the beginning of DC. So, I'm pretty much, I think all of my business is virtually in Maryland. I don't do a lot in other states. I'm 100% realtor referral based. And so, a lot of my deals are first-time home buyers. I think that I certainly touch on a lot of different products. I'm doing bond loans, but yeah, I mean, inside of Maryland, realtor referral, self-sourced LO.
What percentage of your loans, those 20 loans, were first-time home buyers versus, second, third, fifth-time home buyers?
Yeah. So of those 20 loans, 15 were first-time home buyers.
Wow.
Yeah.
So
So
70% of your business, 75% was first-time home buyers. And were they all referrals from realtors?
they were, yeah, they're all referrals from realtors. I mean, they're sometimes a combination of past client referral, as well as, the realtor just directly referring me. So if I get a call from a friend of a past client, I will always make sure that goes back to the originating realtor per se. But yeah, I'd say so in that sense, it kind of stemmed from an original realtor referral. So yeah, I mean, all of it stems from realtors.
Got it. Got it. And how many, what's your conversion? Like how many leads are you getting on average per month? And by the way, guys, for anyone who's thinking like, oh, it's his biggest month ever. I mean, the guy does a lot of volume. He averages between 65 and 70 million annually. Did you say you did 180 loans last year? Is that? Yeah. So, I mean, did a lot of loans last year. So he's just a solid producer, although 20 loans, in a market like this is, I think, pretty exceptional, especially for someone that's pretty relatively new. I mean, you've been doing this for 5 years, but it's not like you've been doing this for a couple decades, like a lot of loan officers. So how many total leads are you getting per month? And what do you, how many pre-approvals are you managing in order to do that kind of volume?
Yeah. And that's a good point. I mean, something that I've been focusing on is how many different leads do I need a day? And so for me, that number is 3. That is kind of what I Monday through Friday at least look for in terms of new opportunities, whether that's somebody reaching out to me through text and just being like, hey, I got your number from this agent, or an agent texted me a contact of a new buyer, email, 3 new introductions to prospective home buyers every day is what I strive to get. And sometimes I get more, sometimes I get a little less, but I think that a good average is 3.
So that would be about 60 leads a month is,
Yeah.
60, 70 leads a month. And you're doing well for you. Is that about how many people do you have in your pre-approval funnel right now? People that are TBD that don't have a home yet?
250.
250. And then what is your value prop? Like, how do you make yourself, uniquely valuable to both realtors and consumers? And if it's a different value, like, hey, my value prop for realtors is X and my value prop for buyers is Y, how do you position yourself? What is your value prop?
Yeah. So my thing that I think has, helped me get through this business and continue that success for me, my value prop is probably the same for realtors and borrowers, but it's really just, I think, helping them structure deals that, one, we can actually, that are feasible, that we can close, 2, will get accepted by a seller, and 3, works for the borrower. So I'm very good at problem solving and just helping the borrowers find a way to a successful story. I think that's really important right now. I mean, we all want that. We all think that first-time home buyers are the next big wave of business for loan officers. So, but the truth is that things are constantly changing. I mean, you just look at different guidelines, different pricing strategies that you can develop over the past few months. So for me, I just think that staying on top of methods to be able to accurately and timely pre-approve buyers and hand them back to the realtors, has been huge. And it sounds super simple, but when you've got first-time home buyers, some who maybe work multiple different jobs, are need a little bit of credit repair. It can get pretty difficult, need down payment assistance, don't necessarily have $50,000 right now to just put down on a down payment and pay closing costs. So if somebody's only got 15,000, how can I get that buyer, in that home?
Do you do a lot of down payment assistance program loans?
We do. Yeah, I do. I mean, I think
Out of that 20 loans, those 15 first-time home buyers, how many of them do you think needed some type of a down payment assistance program or qualified?
Yeah, so 3 or 4 of them.
3 or 4. Are you familiar with Down Payment Resources, a company out there?
Down payment resources? No.
I was actually, you should check it out. It's like a pricing engine for down payment assistance programs. And, there's a version for lenders and a version for consumers. Actually, Zillow uses that as their down payment assistant engine, on Zillow. So anyways, check it out. Might be a good resource for you. And if you want to introduction to the CEO, I know him pretty well.
Okay, I'll check that out. But yeah, I mean, it's just that I think in 2018, 2019, we were able to get seller help for closing costs. But right now, very difficult to get that. So, I mean, that puts a lot of pressure on, I think, the loan officer to figure out ways to still make it happen for these first-time home buyers. So whether that's down payment assistance or, helping them get a 3% down conventional loan, potentially, increasing the interest rate a little bit to give them a lender credit for closing costs, like all different strategies to just bring down that cash to close as much as you can. And not saying that's happened all the time, but that's an example of something that I think is, my agents know that I'm going to look to do for everybody that we need to do it for. So
would it be safe to say that you position yourself as a first time home buyer specialist, like the realtors that know you, they know your story. I would imagine that you own a home, you own multiple properties, and you're a mortgage strategist. They know that you know how to, those 3 things, get the offer accepted, understand the programs, and make the consumer happy. Like they know how to do strategies, and they see you as a first-time home buyer specialist. Is that
they
fair?
do? That's very fair. Yeah. And sometimes not always first-time home buyers. They could have owned a home several years ago, but are still kind of like a first-time home buyer in many ways. So, but yeah, definitely. I think I am certainly known as somebody that just works really well with first-time home buyers. And that's, it's been great. It's been a big growth strategy, and it builds, so, next thing you're able to, get introduced to a new realtor that leads to more business, that leads to more listing agents, just more opportunities. And I think that I'm specifically pretty good at capitalizing on as many opportunities as that come my way.
How are you delivering advice, powered by MortgageCoach and the Trust Engine? Like how does that fit into your process?
Yeah. So where that fits in is when I have home buyers that, are struggling to accept a little bit higher of a payment than maybe they're currently paying in rent. That is huge right now. Folks still think that they can get a mortgage payment of $1,800 a month on a $300,000 home, and it's just not possible to get there with the minimum down payment. So I think, and on top of that, they're probably renting for $1,800 a month. So where I use MortgageCoach is in those situations to be able to show them your rent versus own diagrams and visually show them the amount of wealth that they will create over the next 5, 10, 15 years versus just renting. And the other part that I think that visual does a great job of is showing that home buyers that, hey, like you might be paying $1,800 right now in rent, but that rent is going to increase over the next couple of years. Like rent goes up. So whereas the mortgage payment for the most part will stay the same. So I think communicating that message is vital right now, probably across the country. So your visual for that has been extremely important in my ability to help convert those folks into actual buyers for my realtors.
Do you happen to have one that we could pull up and just show folks? And the tagline that we talk about all the time here at Trust Engine is "No borrower left behind." And so often, because loan officers are unable to help really inspire a first-time home buyer that, hey, maybe your monthly payment is going up, but look at what this means to you over time. That both inspires and educates into home ownership. So don't get left behind. We do believe that home ownership is the best way to build wealth in America, and it's most people's American, dream. So walk us through what we're looking at here.
Yeah. So here I did a rent versus own analysis. All right. And this is for somebody that I recently did, a new married couple who are currently paying about $1,850 a month in rent, or $1,875. And we're looking to buy a $600,000 home. They had really good credit, but I did add the FHA option on here, but look, conventional makes more sense for them. So what I wanted to show them was if they continue to just rent at $1,875 versus buy a house that they would like for $600,000, and show them kind of the breakdown of the differences here and what that means long term. So what I did was $600,000 purchase price, a 3% down payment, got a loan amount of $582. This interest rate is a little bit dated, but interest rate is 4.75 and 30-year mortgage. So their total payment is $41.31 for the conventional 3% down. So net payment, though, the difference between what they're paying in rent for $1,875 versus that mortgage is $2,672. So I'm basically asking them to pay an extra $2,672 a month for the house. You can see that over the next 5 years, that the amount of principal that they would have paid down on that loan is just about $50,000. So their loan balance decreases $50,000 versus in rent, they would have paid $147,000 in rent over 5 years. And that money's really gone. So I can show them how much over here principal that they've been able to pay. And essentially this becomes wealth for them. They've built $50,000 in hard equity that they've paid down versus the $147,000 in rent that they just paid to their landlord. On top of that, assuming a 3% housing appreciation over the next 7 years, we see that their equity has, on top of the home appreciation plus the principal that they've paid, that they've built $228,000 in wealth for only paying really an extra, $26.72 a month for a home. And really, this is a much bigger home because $1,875 in rent is a very low rent payment that wouldn't be a $600,000 house. So on top of that, they were also getting, the house of their dreams. So I can tell you that this makes all the difference in, one, helping our borrowers understand what's going to happen over the next 5-7 years by buying a house, because a lot of people don't even understand that. But then secondly, coming across as an expert to my clients and being able to show them this, I think it makes all the difference in making them just feel a lot more comfortable with the purchase.
Love it. Love it. So go ahead and stop. Oh, by the way, just make note, everyone, notice how, scroll to the bottom real quick, that experience.com integrates with the total cost analysis. So not only is showing, the first-time home buyer, the long-term benefits of home ownership, but, they're seeing your most recent review right there. Integrated.
That's super cool.
So go ahead and pull that down. And while the interest rate was stated here, guys, so, maybe it wouldn't have been a $600,000 home, maybe it would have been 550. And maybe it wouldn't have been as drastic of a net worth increase, but it still would have been a massive net worth increase. So, in every market, you got to help the consumer make an informed decision. And that's what the best loan officers in America are doing. They're netting out the long-term benefits. And now I think it's going to be super important in the move-up market with consumers that have 2% and 3% rates, and rates are at 6 whatever percent, like to make a case for them to sell and move up or to rent out that house and buy a new one. You're going to have to show them the 7-year benefits of that. You're going to have to show them, like, how does that impact your net worth? I call it, financial freedom lending. You're going to need to do that financial freedom lending if you're going to get, I think they're called household hostages and accidental landlords. If you're going to get these move-up buyers out, to list their homes and move up, or to rent out their home and move up, you're going to have to show the net worth over time to make that case. I don't know, have you done that yet? Have you found someone that's kind of like, I don't know, I'm in this house, I've got this great rate, but yet they want to move up? Have you done any of those yet?
Yeah. For me, what I've done is, I think that a lot of people do want to move up, all right, but they have these rates in the 2s and 3s, so they don't want to sell their house. And somebody actually told me recently that I found pretty interesting. For that group of people, they could be doing is looking at their loan at that point, their current loan in the 2s or 3s, really as an asset and not so much a liability, because it's such a good deal. So, but that doesn't mean they can't move up. They can stay in there. They can keep that loan, buy another house, and rent out their current property, keep that same rate, and benefit similarly with the future appreciation. So that's something that I've been talking a lot about. Obviously that doesn't help create more inventory if they're just not going to sell it, if they just rent it out, but it does create another buyer and another option that, again, a lot of people don't consider or even know that they can do. Like, a lot of people say, well, in order to rent out my house, don't I have to refi into an investment property loan or something? And the answer is no. So I do talk a lot about that every day. And I think that we certainly need more inventory out there, but we can only control so much. And that's one thing that is pretty difficult for me to control. So I try to focus on my specific borrower and how I can best help them, best help their agent, achieve what they're looking to do and get to the next step.
Well, I'd like to close this out with how the last question I asked at that mastermind, and everybody went around in like a minute or less and answered it. but like what's working best for you right now? You know, like it is April of 2023, you know, rates are over 6%. Obviously you're doing pretty darn good, but like if there was one thing that you could give this audience and everybody watching, what's the one thing that's working best for you right now?
Yes, I'll say what I said last week, and that, you know, I think that what's working for me is consistently coming to work every day. And I think so not, you know, giving up, not getting too discouraged. And when, you know, rates are over 6%, I think it's easy to do that, but consistently staying, you know, in that mindset that, hey, like there's still a lot of business out there. There's a lot of opportunities out there. So it's not like there's no opportunities. There's a lot going on still. So, you know, making sure for me that I understand that, so I'm not missing out on those. But along with that, with the extra time that we have, given that our pipelines are a little bit smaller, spending extra time on the phone with our clients and getting to, you know, really understand their fears, their concerns, their story, and not just going right to the loan app and moving them along. But, you know, for me, when I find that when I can spend more time on that initial call with my clients, that they're way less likely to go with another lender or shop, and that they leave that call feeling way more ready and comfortable to make the next step. So, you know, spending time building trust with the clients that I get, every person that comes my way. And so, you know, that is truly what's been, I think, been working well for me. And, you know, obviously it takes time to see that sort of pay off. But, you know, if you do that consistently, it definitely will at some point.
And I love this conversation. I really love getting to meet you, to net out a few thoughts and call out a few insights I have from listening to this conversation. I mean, it ceases to amaze me that, you know, being consistent, showing up consistently, doing the work, being intentional that I want to generate 3 leads a day, and then consistently having the conversations with realtors is the key. And then of course, if he wasn't like truly this advisor, I mean, his advice makes a difference for first-time home buyers, because he bought his first house at 23. He's bought 6 more houses. He owns 7 properties. So he's experienced from a personal way. And then he's a mortgage coach. He's delivering advice, not price. He's not selling loans. He's selling, I'm going to help you get into your new home based on your unique situation, your goals, community resources. I'm sure you have a great relationship with the realtors. I would love to do a bigger interview with you where, like, how did you get these realtor relationships and how are you winning them? By the way, are you still calling new realtors all the time, or do you have like, hey, I've got my flock and I'm good, or are you still hunting new?
No, I am. I'm actively calling realtors. I've got several that are kind of on my list of agents that I am not getting business from, but I want to try to get business from. So, you know, I'm not doing, you know, 30 cold calls every Monday like I used to, but I am reaching out to agents that I've done business with in the past and trying to, you know, gain their business. So yeah, that is something I'm doing.
Right on, right on. Well, hey, Andrew, I look forward to having more interviews with you, sharing more success stories, not only around Mortgage Coach, but around Sales Boomerang. You know, at Churchill, you guys have the whole Trust Engine suite. So let's do another interview next quarter. See if you're still closing 20 loans a month. If anyone got value from this, you liked it, Like if there was ever a point where you're like, that was inspiring, or that was an idea that I'm going to implement, give us a like on social media right now or in YouTube. Share this with your mortgage friends. If you just do it, what Andrew's doing, show up consistently, make the calls with intention, be an advisor. There's an advice revolution going on out there right now, and lenders like Churchill, loan officers like Andrew are, they're leading the advice revolution. So thank you, brother.
Appreciate it, Dave. Thanks so much.
Yeah, don't hang up. I'm going to stop the recording, but